Welcome to TradeTheMBI.com. This is John. This report is for the 9th. Well, that's a nice turnaround. So we dipped below the ABM green and started a pretty quick push back up. The previous day had done pretty decent. We saw some softness go in, and then once we got back above the ABM green, new fund money just went through the roof because we had just enough shorts, but we had seen the decay starting already from DOC cyan here, which are the shorts and then the short-term buyers, and that's what we were talking about, whether that would be enough to lift. Not only was it enough to lift it, but completely flipped the script on the turnaround. So we eased off all the overbought completely and have completely reset, which is something we've talked about before after we got into this little soft move. We were expecting something that would dip towards the 76%. NASDAQ had already done it. I was looking for at least the fill of this positive extreme, which we got, and off to the races again. And that's just because the economic situation numbers are benign in that from that standpoint. Um, None of the catastrophe scenarios of the economy falling apart justifying the Fed's move. Is the Fed still likely to soften things with the election? Absolutely. But needless to say, that isn't going to really have that much of a dramatic impact. The budget deal got signed, which huge spending again. So from that standpoint, everybody's relatively happy. From an NQ, you can see we dipped below that 76%, filled even more of those positive extremes, almost coming back to the original first one. Would have been right about there at 16.306, and we get to 16.4. So it was pretty close in that aspect, and you can see the turnaround of magenta over MBI white, and that's all it takes, and not to mention DOC orange. We were talking about the orange dip and how fast those decline under red. And worked out just like that because it's usually a turnaround bullish, and we were just waiting for new fund money to get activated because we know it's there. And certainly wasn't really piling heavily into treasuries. You can see the yield coming back, even though treasuries are way out of line with where rates currently are. It'll have to even back. And we saw those same things all throughout 2023. The bond market was way off, had to correct, and then just did the same thing back and forth. From an oil, Saudis decreasing price dramatically, not that much demand. That's an interesting one from a worldwide perspective as far as global growth. It does portend some interesting things, but still elevated. I mean, we need to be in the low 60s in that for it to really aid in growth for the U.S. at least. And even if it did, you wouldn't see it until the final quarter of the year at best. Euro holding pretty even, which is impressive for that. But again, it needs to be propped up somewhat. Otherwise, it creates a lot of problems elsewhere. From a gold standpoint, nothing. That just caused even more because it's non-inflationary, particularly with oil not doing anything. So it's just going to continue to be soft and hover. Bitcoin and them got their they're now on the last leg of their approval for the ETFs, and that obviously is creating more news, excitement, and pushed it to new highs for the year. Not overall highs, but new highs for the year. I consider this kind of funny. We just started, but okay. Trading humor. I mean, what are you going to do? ETH. Um, just as good, however, because it's been much more muted, it really wasn't as strong a response. So you can see definite outperformance from a Bitcoin standpoint relative to the others. And from a 50K standpoint, you can see the beautiful move lower, supported based, higher pivot, much higher shakeout readings, as well as P2 pivot DOC, where you get the higher red pivot and rising gold. And once that gold started to rise, you could see the momentum of that swift and strong. Not that many positive extremes to fill on this, so only back to the 69 range. That's very reasonable to do and wouldn't impede any continuation. So it's worth noting what we saw from an intraday standpoint. It started pre-market well into my European session and then continued to just scroll up. little sideways action, but then it just each one was a new burst back up and came all the way across. A lot of intraday positive extremes, not to be trifled with, but then again, we saw it from a 50K, so we know where they're going. And then actually, if I mark it, you can kind of get an idea of where that filled back from there. It's the only problem I hate with the time charts. We just get a horizontal line right there, just like that. So we filled all the way back to these. It still leaves considerable range all the way into the 70s potentially. Um, Prefer to go off the 50K than the 5K because this becomes more of an intraday setup, but it's just worth noting it just so you can see how that construct works. As always, though, I will continue to update you on the Skype chat, but that was not a whole lot that really required any attention. It was just pretty much straight up. Not much deviation. So, well, we get some back and forth, yeah, but in general, the bias is still to the upside, at least for now, barring any new world scene developments. So we just continue to go with the stabilization, and with the big move that we saw the other day, it would not be unreasonable to get 50% fill back into that anyway. And that would probably satisfy our 50%. On the 50K chart for the positive extreme would definitely match that and be all set to see shorts activate and then they reattack for another push higher. As always, though, I put anything relevant, like I said, on the Skype chat. Trade well.